Every time David Shapiro and I get together, I think, oh my goodness, it's been so long. You know, Dave, we worked together for like 25 years. It's next, I worked out next of next year, as they say here in the Western Cape. It will be 30 years since we launched business radio in South Africa back at the SABC dungeons, which you'll remember so well. But my goodness, your wisdom has just grown and grown, and more people want to know what you think about lots of things. And so it's hard to catch you though, because you travel quite a lot nowadays with your family dispersed over the world, which I suppose does also give you a very useful insight into global markets, which are so important to us, aren't they?
It is, and you pick up the mood of the people around there. And I think that's very important. I've just come back from the United States, and it makes you think. You know, the people are walking around there not quite sure of who they are, what America is. It's quite important. It's a nation that is completely split. So you pick up the mood from talking to people, how they're shifting. They don't like the left, they can't stand the left, and they can't stand the right. But there's no one in the middle to guide them. So it's business still thrives there. It's still a very dynamic country, but people just don't feel like they're Americans anymore. They don't know what that means. So you pick up those kind of moods from conversations with people.
And on top of that, you got Warren Buffett buying Alphabet shares.
Yes, I'm happy about that. Alec, I have to say one thing. I wrote an article, me and Warren B, and it was great sadness that I read his Thanksgiving letter. And when I say sadness, genuine sadness. And the reason is that I don't think people appreciate what a personality is. You might not agree with his views, you might not agree with his philosophies, or his business strategy. But as a person, he has to follow him and his philosophies and just his outlook on life. No one's going to fill that gap. No one, that I can see. So it was really sad that he said, this is it, this is my last letter. And even that was so filled with warmth and, love. My letter was around Rose Blumkin because he didn't mention her. And yes. I said, no, she was a favorite. So I'm so sorry.
Tell us about her, Dave. Tell us about Mrs. B.
It's a wonderful, wonderful story because she epitomizes what he looked for in a business. She was a young lady who came to America. She fled she followed a husband from Russia. He didn't want to be conscripted into the army. Now, she started working at the age of 6 in her grandmother's grocery store. And by 13, she had a few people, I think about 6 people reporting to her. But she made her way across Russia to America into Fort Dodge, but then eventually moved to Omaha, where she started to sell furniture in the basement, and from those humble beginnings, and this is, I'll give you the important part, from those humble beginnings, she built up Nebraska Furniture Mart, which was, I don't know where it is today, but a few years ago was one of the biggest furniture retailers in America. What defined her is that she couldn't read or write. Buffett came and made her, I think in the mid-'80s, he made a bid for her business at $55 million. And she accepted. It was a one-page document that cost $1,400. But she accepted the deal. When he did stock, he found that the stock was worth $85 million. But she didn't go back on her word. She never went back on her word. And there are lovely stories around it. And he appreciated that. She had done a deal and she stood by that. But I think what happened later, which is also a fascinating story, is that she was 96 still working, and her young, her sons and the family were kind of ignoring her or sidelining her, and she said, I'm retiring. But she couldn't retire, and then started in opposition. She started in opposition to Nebraska Furniture Mart.
At
She was doing so
96.
much damage at 96. They had to come and Buffett had to buy her out for $5 million. And she said, I want cash, no credit, I want cash. And, which is a wonderful story. And he said, okay, we'll give you the cash, but we'll give you this deal, but I want a no compete deal. In other words, you're not allowed to compete with us. Okay. She continued working to 103 and died at 104. And he always warned his executives. Remember, he'd say, don't retire. Look what happened to Mrs. B, when she retired and that. It's a wonderful, wonderful story, which I think was, full of humor, just full of warmth and just for me, typified what he was about and the people he loved and that were close to him in Omaha. We don't see stories like that now. No.
Well,
anyway.
It's also the reason why at Biz News we have a retirement age of 103, taking it from the Berkshire retirement age. Although he broke his own rule, didn't he, Warren, by actually retiring at, 96?
95. Yeah.
95.
He born in 1930, August. Alec, I think he's feeling it. I think at the last presentation, you could see he was stammering a little, struggling with memory. And I thought to him, he said, well, probably said, I can't do this. And I think that's why he made that announcement there and then and handed over to Greg Abel saying, this is it. I think people weren't expecting that. But
is that the end, Dave? Are you going to go back to Omaha to the AGM with Warren not on the stage?
I don't think they can carry it like him. Alec, in those years that we used to visit, I used to make my own notes. So I never read books or anything, and I never read articles. I sat there and took down every word he said. And the wealth of information that I still have today that is relevant on investment, on his views on life and that, his views towards children. I mean, how to live their own life, not to live their parents' biographies, and the whole thing of read, don't do kind of read Phil Fisher, read Benjamin Graham, don't do equations with Greek letters in there, that kind of, and the whole thing is anybody came to him with a spreadsheet, he just ignored it. So he taught us how to recognize good companies, and he'd say, just go for companies you like. If you like a company, look into it and research it, and look, what's it going to look like in 5 years' time? What's it going to look like in 10 years' time? And research it. And ignore the ones that you don't like. You don't have to follow every company. So they're just hundreds of pieces of information, that I still have on file, still have in presentations that are just so abundant with with guidance. And that's what I'm going to miss. And I loved his humor. And he was self-deprecating. He never, we make mistakes. I always admit that. They never got everything right. And that's in today's world where it's so greedy, run by algorithms. Everybody looks, what's the market going to look like in the next 5 minutes? That's our outlook. It's not, we don't make long-term decisions. And to be in markets today, Alec, you've got to say, what's going to happen this afternoon? You can't operate like that. And the sad thing is our clients, Alec, and this is where we've changed, and this is where where we've changed a lot is that today clients walk around with their cell phones knowing on the minute how much they're worth. Now, when you've got clients like that, who are judging you every 5 minutes, it's a whole new ball game. It's a whole new industry. Yeah.
Yeah, the world has changed a lot since David Shapiro first became a stockbroker. If you were to go back, though, Dave, back to the beginning, would you, let's just say you were a 30-year-old with 10,000 Rand and you had the choice of doing anything. What would you have still gone into stockbroking, or indeed, if you were 30 today, would you follow that route?
Funny enough, I got in there by default. If when I was at Wits, I was far happier on the football field than in classes. Or if I was in class, I was drawing my lecturers. That was my attitude at that. But and I think a lot of the blame was the lecturers, and the system. It didn't teach us anything. It didn't mentor. And as I got in and started to learn more and became more comfortable, so I began to enjoy it. And even now, I'm 78, Alec. I'm an old man, but I still get up 4:45 in the morning, go see what happened in Europe, what happened in Asia, what markets are like, and thinking, okay, is everything, what we're holding, is it still relevant? What do I do? Is there any news? And I enjoy that part of it. I love the politics, economic side of it. I'm not a great analyst in that. I don't, I don't like to delve too deeply and to develop, 3-dimensional spreadsheets. I just like to look for good businesses and say, okay, where things happening, where should we go? Where's the excitement? So that's what keeps me buzzing, what I enjoy. And I must hand to you, I must hand it to you when you say we're back 30 years. You've been hugely instrumental. And I'm not here to flatter you, but I think credit where it's due in actually bringing markets to people, making them understand markets. And you're still doing it, It's wonderful.
Like a soapy breakup scene, selling your car can be an emotional experience.
Just how dramatic was the car selling experience?
Not dramatic at all. I did my research and We Buy Cars was by far the best price.
Very not dramatic. But I like drama.
I was standing there watching my phone, waiting for the money to get in, and there it was.
Yes. Car, driving.
We Buy Cars, the easiest way to sell your car, by far.
I wouldn't mind a little more drama. Anybody bring me some tears?
It's so exciting, though, isn't it, to be able to live your passion on a daily basis, and something that is so dynamic. I remember you said to me a little while ago about ASML, and I just took your word for it. I looked at the annual report, didn't really understand what the heck they were doing. Said, no, but Dave just loves this stock. We put it in our portfolios. I've just read a book called The Chip War, where they go into great detail about semiconductors, how it started, and this incredible company called ASML, who's in the middle of the whole semiconductor kind of universe. And there you are, Dave. You caught that one long before anyone else. And there's no way in 100 years, doesn't matter how much money that Donald Trump wants to throw at its competitors, that they're going to catch, well, certainly not for my money, they won't catch ASML. They have just done too good a job there. But have you got another one of those for me, Dave? Or for the Business Tribe?
Well, I must tell you a lovely story in because markets move. And the other one was Nvidia, Nvidia, which we found making these kind of chips, which were used for graphics, which were used mainly for gaming. And in 2022, when Powell started to increase interest rates, this was also the aftermath of COVID. Remember, during COVID, everybody was playing games and Nvidia had this abundance of chips, which they couldn't sell. And Nvidia in 2022 kind of fell 65%, the share price. And we had it in portfolios, and everybody was saying, what are you doing with Nvidia? Why you got Nvidia, And you feel insecure and you say, okay, I better get out. And then what happened exactly 3 years to the day, or the ChatGPT comes in. 3 years, Alec. And suddenly, who's the poster child? That is Nvidia. And now everybody's saying, why haven't we got Nvidia? Why haven't we got Nvidia? But I think those are the kind of companies that I love. And you've got to, I like Jensen Wang. I don't know, I'm not quite sure how to pronounce his name, but and I still follow it despite the fact that it's under a lot of pressure now. People say it's overpriced, whatever it is, and competition will come. But that was another winner that's just a phenomenal business, and they're not going to stop making chips. And chips, sadly, Buffett always used to say, remember, he would always say, and we were at the meeting where he would say, look, in 20 years' time, why aren't you in technology? I don't understand it. In 20 years' time, kids will still be drinking Coca-Cola and eating Wrigley's chewing gum. And hold on a sec. you dare give your grandchildren Coca-Cola today. You can't take them out because of the sugar high. And every time I go buy some Wrigley's, they break because they've been on the shelves for so long they crack. So and what it's been replaced with is your phone. Your phone. Kids, I've got a granddaughter now who's 18 months. She's in Australia. Look, she's coming here, but she picks up the phone, and you can't fool her. She goes to my son and my daughter-in-law's phone, picks it up and starts talking, mimicking talking. So, that's how things are changing, and that dictates. So things change, and you've got to adapt to this change, to what's happening.
Now, you got this very famous competition, the Crystal Award, or the Crystal Challenge, rather. I want a little bit of an insight here for next year. What stock as of today? And of course, you're going to change your decisions. But as of today, what stock should we go and do some homework on for the Crystal Challenge for next year?
You've got to choose 5 stocks, okay? And you can't sell. You can sell one, you can cash in one, but that's the beauty. And what I love is the people who won it were gold bulls. They bought 3 chaps, unconnected, bought 5 gold stocks and blew everybody out. It's strange. I'm not a gold bull. I'm not a gold bull. And I must state it. I used to deal in gold shares, but gold, I still think is great. And you've got David Melville, who's a great fan of yours.
No, but David, hang on. Archie's turning in his grave.
My dad, it's sad.
Mr. Gold.
He loved gold. And from the very early ages, when he joined the market in 1931, 32, I think the UK had gone off the gold standard, and he got a job. It was in the depths of the Depression, and for his whole life was around gold shares. But when I say around gold shares, not only did they trade in gold shares, trade in De Beers, but they used to promote it overseas. They would do these trips, and they would promote gold shares to the Swiss, gold shares to, in other words, selling South Africa to the world. And they had connections in New York, London tremendously, huge amount of channels into London, but into Belgium, into Brussels, into Paris, into Zurich, into Geneva. And that was his life. He traded gold shares, for what was more than 60 years.
And the apple fell. And the apple fell a long way from that tree, huh? As far as gold's concerned.
Yeah, things changed. I loved gold mines. Remember, Alec, in the 70s, during that time, the gold price was pretty static. It's only when Nixon took America off the gold standard or the exchange. I hope I'm getting the terminology. You could convert your dollar into gold. He removed that, and only then did the gold price start to move, but at very slow pace. Before that, it was at first $35 an ounce, I think, from Bretton Woods, and then later on became 42.2. They increased it, and today America still values its reserves at $42.2 dollars. So they've got 8,000 tons at a cost price of $42.2. $42.20, whatever it is. But I think we were great. What defined my early years in the market was that we were by far the resource capital of the world. And we dealt, those middle boards that we had on the market when you walked in, all the gold shares and, the platinum shares, the coal shares, whatever. It was such a, and then the mining houses themselves. It was such an incredible market, and we were so powerful. We've lost that, sadly. We could have kept a lot of it, but I think politics has taken us away from that. We're nowhere near those kind of things. We were a powerful nation. We were a powerful market and a very powerful nation in that. And I loved that. I loved going down gold mines. It was always an occasion to go down. I remember going down to South Vaal and all of this. It was a wonderful time, you know. But we have to change. We have to adapt.
It is an interesting reminiscing about that. But when you have a look at the stock market, the South African stock market as it is today, the gold shares have had a fabulous run recently on the back of a strong gold price. But you still more keen on the bigger mining groups, on the diversified mining groups, if I read you correctly.
I am, and they've underperformed. You know, if you look for the year, I think BHP is probably flat. South 32 is in negative territory. Anglo's is up because of the deal it's done with tech, you know, because of the corporate deals. And also it had been sold down quite a lot. So that's the rest are, even Kumba has done nothing. So it's all been about the gold shares and credit, you know, credit to those miners. They've done incredibly well. The sad thing is neither Anglo Gold nor Goldfields does anything in South Africa, save Goldfields, I think, South Deep, but they're making their money outside of South Africa. Look, Pan-Africans around, Harmony's still okay. I'd love to get Peter Major. He'll tell me where the gold reserves are here and, you know, where we can make some... They're there. They're a lot deeper than we can get to, but that Witwatersrand Basin, you know, which kind of almost encompassed the whole of Witwatersrand and Orange Free State, you know, the gold's still at the bottom of the basin. But we only mine what do you call the peripheral, you know.
Yeah, so, the fringes. Now, Peter says that there's enough mineable gold in South Africa exists as the amount that we've taken out, and by far the most in the world. But he complains about the legislation, and he says you just got to get the regulations right. Are you seeing, Dave? I mean, we could go on a downward spiral now and about that, but are you seeing any light at the end of that particular tunnel? And I ask this because I'm suddenly seeing on the gas side, which has been disastrous if you think about it. Namibia and Mozambique have got the same resources we've got. They are pulling in hundreds of billions of dollars in investment, and they're getting ready to pull out gas. We have got Zippo happening in South Africa, but there are signs of life at last. Are you seeing any signs of life on the mining side?
I'll watch carefully, and sadly, not really. You know, nothing to get us excited about. And it's tragic because the money's there. The one thing the world is awash with money. There's plenty investable money, not necessarily from the Americans, all over the world. And you see it in Australia, you see it in Canada, you see it all over. There is money. And the problem is that we put obstacles in our way. And I always remember listening to an interview with, I think it was with Intel. I can't remember where the CEO said, you know, if you go to Canada, they roll out a red carpet. They say to you, what can we do for you to make your company successful? That was the attitude. I always remember this. Here we do the opposite. You know, we put obstacles. We say, yes, you want to come in here. This is how you're going to conduct yourself. This is who you have to employ. This is where you have to buy your goodies from, and so on. And I think that, to me, has been the biggest problem here. We don't encourage. We make noises, but when companies come here, we don't go out of our way to make them comfortable and to do things. And that's been the sad case of South Africa. Alec, if you break down the JSE today in terms of market cap, I think 80% of the companies that make up our market cap do less than 20% business in South Africa. In fact, I'm being very generous when I say 20%. You know, most of the JSE is foreign earnings.
It is sad. I was just reminded of every morning, like you, I'm also the member of the 5 a.m. club. And this morning, I had an interesting reading from Plato. He said, ignorance, the root and stem of every evil. Now, if you think about that deeply, and then what he said was that there are two types of ignorance. And the worst type of ignorance is of those people who are arrogant and thus believe that they have the answers and are not prepared to learn. So there's a whole lot of philosophical stuff in all of that, but it's also perhaps required of those like you who have the wisdom, who have the knowledge, to share this knowledge with those who don't have it, so that they can understand these things. I suppose just the way that the knowledge has been shared with the people in Pretoria, it hasn't landed, and I think it's starting to land, Dave. I think it's starting to land, but maybe that's because I'm an optimist, and I was hoping you felt the same.
I love that. I always give an example, and I know that my wife is going to listen to this podcast. But my mother-in-law, she was a Batuacho. She was an activist. Spent 3 years in Barberton jail. I mean, she was a commie, whatever. But she was honest. She was those were her beliefs. I didn't fully agree with it. When we used to meet on Friday nights for dinner or something, I mean, you had to be present at the table. But what was interesting about her, and what was interesting about her beliefs, and I always say that, she thought that if she marched on Pretoria and went to the union buildings and went into the basement and opened the lockers, or opened the safe, they would find diamond and gold and immense wealth. So there's still a massive gap in the way people think. They don't understand what economic value is. I would say Malema's in the same situation as that. They don't understand how a country creates wealth, what drives it. It's those businesses, those factories that you go into that create jobs for the people, for the community, and so on. Mines were ecosystems. That was so important. A mine, a shaft, round the shaft, you had the concession stores, you had the chemists, the schools, everything. That shaft fed a whole industry. And that's economic growth. That's what we have to explain. And we can't get that message through. That's how you create wealth. It doesn't matter who owns the factory, whether it's a green, yellow, purple person, it doesn't matter. As long as they're employing people who get money, who can send their children to school, and so on. That's the ecosystem. When you close a factory, it reverses. So that's the kind of message I try to get through to people. That's what growth is. It's not some diamonds hidden in a safe somewhere in the bottom of the union buildings.
The view that South Africa was this incredibly rich place that just oozed wealth. All of the economic growth in this country was created by the effort of people across the board, not just those who did the pick and shovel work, but very much those who were directing it, and the capital, of course, that came in from abroad. So anyway, I think it's starting to resonate, starting to land. But just from your perspective, you recently said that your stock pick was South African long bonds. Now, for a man who's been in the stock market and with equities for half a century, how the hell did you make that change?
You know what, Alex? I still think it's actually a vote of confidence, because and I don't buy products. I look at the long bonds, and I'm looking at the 2040s now. So we're at 25. So it's only a 15-year bond. Excuse me. It's clean yield, to explain. That's the yield. If you put money in today, that's the yield you would get. I'm not going yield to maturity and building in all the capital, getting too technical, but that's 9.5%. And I'm saying, hold on a sec. Inflation 3%. We're certainly going to try to get it down to 3%. That gives you a 6.5% real return. Okay, you'll pay tax on it. If you pay 45% tax, right, it still goes down to about 5.5%, 6%. That's still a pretty good return. And that goes through to 2040. And it's tradable. You want to get out, you get out. I still am recommending it. I've just read a letter now that we're writing to a client and telling him to say, just this, you want to warehouse your cash, here's the way to go. And that's a very, very positive. Where else is looking good, Alec? Are those property trusts. Growth Point was up 30% last year, and that's before the yield. Vukile, the same thing. So when rates start to come down, and we're seeing the market stabilize. I'm not a property man and I'm not a bond man, but they look attractive.
And I guess that's really a big question for you, because I've been looking at the details of reports from companies recently. And if you were to take a sector, banks,
And-
industrials, resources, and property, and I looked yesterday at Hyprop's trading statement where they're talking about a yield or a distribution growth of between 10 to 12%. 10 to 12%. In the year, and the trading update said that's solid. They're with it. They aren't making any adjustment to it. That suddenly became quite appealing to me, given that the shares are not overly expensive. What is if you were to take one of those four sectors, which is the one that you'd plump for 2026?
Four sectors. You know what I love? Okay. My favorite stock at the moment is Pepkor. and you know why, Alec? Have a look what's happening in that market, in the banking market. Capitec is just swamped over First Rand and Standard Bank. Okay, I'm exaggerating a little, but we were always writing it down, always trying to knock it, and they just know their market. Now they're being challenged. I love what Pepkor's doing. I love what they do, and I love what's happening in that market. Tiger Brands going down and saying, we don't need to go to the cash and carries anymore. I mean, cash and carries, for informal traders. We're going to get our goods to the informal market. So there's a massive market underneath there, which is actually the biggest growth area. Even Investec, they wouldn't take you unless you had 50 million Rand account with them. Now they say, well, not so fast. You remember they wanted the doctors and the lawyers and the accountants and the engineers. That was their market. Now, okay, not so fast, because that's where there's massive growth. And I find that's where the excitement is in this market. So I think, first of all, we're getting that recovery, as you started to talk about. Well, it's stabilizing. It's stabilizing. So you're getting the long bonds are looking attractive. Property is looking attractive. And I like that bottom end of the market. The fight between Shoprite and Capitec and Pepkor and everybody for that informal market. I think that's probably the most exciting place to be here.
Tell us more about Pepkor and why would Pepkor be a competitor to Capitec?
Because for the last few years, they've been focusing on the informal sector. And they've got this, they're going to start a bank. And they've already got this app, or this product called Flash, where they're enabling those informal traders to convert that, or giving them almost like tokens where they can go and spend it or save it or remit it. And they've been doing this for a long time, and it's suddenly becoming a major part of their business. And I always liked where they are. They are opening 25 stores a month now this year. I said, I didn't know we had so many cities or towns or villages. But from the early days of Rainer van Rooyen, when he used to have those Pep stores, where the little kids would have those grey pants on and the white shirts and those black shoes and off to school. And it's always been something that I've loved. And I'm off to the game reserves, on the weekend, and I love to drive up, through Mpumalanga and everything. And there's always a Pep store. You always see the Pep stores and the cash bills and everything. Give you such a great insight into, what's driving this economy now. So that still remains a big store. And I like Boxer. I like Boxer as well, which is, in fact, that's where the wealth of Pick n Pay is. It's all in Boxer. And poor old, I think, Short Summers knows this, so he's battling against, not against that, he's using that as cash machine. But I think that's the exciting part of the market. That's where development's taking place here. That's where we've got to watch. But stable economy, I think you can't ignore, the property sector, which has gone through a very rough time because of costs, because of Eskom, because of those issues, starting to pick up a little bit. Maybe not in the big retailers, but there are pockets that you can make money on. I like, and and I think gold's going to stay, Alec. This is not, the gold price, I don't think is going to go down, and it looks like it wants to go better more before it goes down.
It's so interesting because you were very excited about technology before most people, and I can say this because we worked together on radio every night for so many years. I remember you getting really upbeat about stuff. Then the rest of the world were shaking their heads. Now this informal sector, that's something Gigi Alcock's been talking about for a long time. And it sounds to me like the penny has dropped with David Shapiro, who's saying, let's go with the informal players. And when David Shapiro moves in that direction, the crowd tend to follow at some point, not always immediately, but is it a similar trend to the technology trend that you went for some years ago?
I was still an AR junkie, I love AR, but it's a different market. Alec, there's always opportunity, and that's how I'm saying in our market, this is where the opportunity is. I still, I still follow tech in a very big way, but I think that you asked me about the Crystal Challenge, and I'm saying that South Africa. These are the kind of companies that I would look at. I like the trend, I like that businesses are adjusting and going down to those kind of levels, and I think that's where the excitement is going to be. So you'll make money here. You'll make money out of our market, but you got to do your research. You can't just sit back and think this is going to fall in your lap. You got to be shrewd. You got to do the reading.
Got to be in the right parts of it as well, and the right stocks there. Dave, you've seen all the problems. 1987, prior to that even, certainly 2008, the COVID crisis. Are you sleeping well at night, or are you starting to get a little worried? Lots of people talking about a bubble.
Nah, this is not a bubble. .com was a bubble. Alec, you know that we've had, I think, a crisis every 2 years. From 9/11, the Iraq War, global financial crisis, debt crisis, China crashes, you name it. And that's just part of what markets are. You just have to adapt to these crises and work your way through it. So I don't lose sleep over these things. You've got to assess it. Is it? You know what worried me, and these signs were evident in the .com bubble. You knew things were mad because everybody was banging on your door, buy me this, buy me that. We're not in that mania yet. Alec, you've got to read 1929, Andrew Ross Sorkin's book. Very, very. I think it's a brilliant book and gives you great insight into what happened there, and also into the minds of those traders. And the crash only came a few years later. But it's a very good history. I don't want to call it a history book. I'm going to call it a novel. But that was mania. 2000 was mania, and the 2008, that subprime crisis, that was mania. Where you remember the strawberry pickers in California could go get a bond, 110% bond, and that was madness. And the kind of things that they created. What worries me, I watch that private credit market. Because while it's well controlled now, where there's money being made, you start to get the fringe players coming in and starting to also do it or try and do it. And that's where, and then they, in order to get competition, in order to make money, they start discounting and becoming reckless and not following the same kind of rules. And that's when you start to watch and get worried. We're not there yet. We're nowhere near that yet. Or hope.
It's a very good point. I recall so clearly and often share the experience that I had of the first bubble. It was in 1987. And literally, I was the belle of the ball at every single dinner party that I went to, even though, as this young guy who didn't know a hell of a lot, but everybody wanted to buy shares. And if you knew a little bit about shares, a little bit like the .com bubble as well, you knew a little bit about the internet, boy, were you popular. And you've been through the lot, and I'm delighted to hear that you are not losing any sleep over this one. But I need to ask you this very important question. We have met lots of chief executives. I'm not going into Marcus Jooste because we went off to go and see him when he was still, well, maybe honest, but he was still honest. His place in Weinberg and David. But who's the guy today? Who impresses you today of all the CEOs around today?
Locally here, I don't know. For me, it's a big worry. We've lost so many personalities, and it's a big concern. I like what people like Charles Kruger are doing, but there's no one who stands up that I feel really comfortable for. I loved CMH. I loved, remember Cash Build, what's his name? Pat Goldrick, those kind of people.
Pat Goldrick.
Yeah, I'm not sure today, Alec. And I say that in politics as well. That's why when Buffett went, I said, we need personalities. We need people who can come out and say it like it is and say it in easy understand and attack government or attack the establishment. I don't know. I have to think about it, but I do go through a lot of companies. The AVI, but they're not personalities in a way that are going to change specs and get out there and challenge it. I don't know. I'm struggling on that. I think we've got a pretty. This is going to cost me, and this is going to. I think we've got a pretty dull bunch at the moment. I don't know.
Maybe,
you might give me
maybe we've made them dull. Maybe too many people have read Jim Collins, and Jim Collins says he likes it when you're under the radar and dull and don't talk about things. And perhaps too many CEOs have been taught that at their business schools or wherever, or maybe there are too many accountants who are CEOs nowadays. Where's the Brian Joffe? That kind of business creator, but they exist. They're around. You just got to look for them. I think
I'm looking for them. I think we've lost a lot of personalities. A lot of them are away. Even in the.
But no one jumps out at you. No one jumps out and says, "This is a guy to follow. This is a guy to watch."
I think I'm fair. I should have gone and gone. I still go through all the business every day. I try to go through results as they come through, and. When you go and look at some of the insurance reports that go through that, that's agony to go through. It's agony to try and read and understand what they're doing and where they're going. There are a lot. I like Jeanette Maria at MTM. Yeah, I think she's doing an incredible job turning that around. Suddenly, this was the ugly duckling is beginning to be a bit of a swan. It's done very well as well. Trying to think of other areas.
Assurance?
Yeah, great company. Good company. It's done nothing this year as well, but also something to be proud of. And they've done very well in Australia.
What's happened to Adrian Gore? He was almost a colossus at one stage. He seems to have perhaps he's just quietened down.
I think it's very quiet. I think there are a lot of political battles in these businesses. You can't say too much, and you can't say, it's very hard for them to really say anything. Yeah, I don't know, Alec.
Andres van Heerden? Andres from Affimat? Yeah.
Yeah, shame he's battling with his with the cement side of it, but he was great. I loved Affimat. I think they've gone off the boil now because of I think some of the acquisitions. They'll come back. I don't think they've lost the touch. But let's see. I don't know. Who's your favorite?
We shall see.
Yeah.
Yeah, it's an interesting time there. Just getting back to the AI story, because that is it's a good place to end with, given that it's so much in the headlines at the moment. Is the trade there becoming overcrowded? I know we don't have much AI trade here in South Africa, but when you look globally, is it Palantir we bought in our portfolios at $8? It's now nearly $200. So the tribe is delighted with that. But I'd love to find another Palantir somewhere. You just worry that, well, maybe that space is now becoming, capitalism. You make excess, you make excess money, and then you get 100 people coming into the same area. Is that in AI not a problem?
I think we had it with Nvidia. Everybody when it went up to $80 or so, and I'm talking about after split, they said, "Oh, no, I've got to get out." I said, "No, you don't have to." And my test is, would I buy it for clients coming in today? Yes. And if I'm going to buy it for clients coming, why must I sell it for the clients who've got too much of it? So it doesn't bother me. But Alec, I think you're going to be spoiled for choice, and that's it. Well, you've got to do your research and be a little careful. But these, you know how big Nvidia is? Okay, I'm going to tell you some of my research. Okay, if I've got a friend called ChatGPT, and I always ask him questions. There's a particular person there who knows me there at that ChatGPT. So I said, tell me because I was fascinated by central bank buying of gold. So I said, what are the top 10 holdings? In other words, which central banks are buying? There are 10 central banks that have got massive reserves. America leads with 8,000 tons. So I said, okay, take those top 10, which is the Germanys and Chinas and everything. I said, and value their gold holdings at $4,000 an ounce. You know what it came to? Just over $3 trillion. Okay. All right. Maybe $3.5 trillion. What's the value of Nvidia? It's like $4.5 trillion. So the total gold holdings of the central bank, I don't know what's tucked under, under mattresses, or some old ladies keep a checkers bag with millions of coins in the top of their cupboards or something. I don't know that kind of hoarding, but the gold holdings, that's not a lot. So the gold market is actually very, very small. The whole UK market, the FTSE. Now, what's in the FTSE? Rio Tinto, Anglo American, BHP Billiton, Shell, you name it. You know how big that doesn't even equate to the market value of Nvidia. Nvidia is bigger than the UK market. So it gives you, why I'm identifying doing this, it just gives you the size and power of these businesses. Apple's $4 trillion. Then you've got the Alphabets, so they're huge businesses. They are mammoth businesses, and continue to generate a lot of cash, which gives them the muscle to keep ahead of the competition. They can spend developing new chips, spend new businesses, which is very difficult for up-and-coming businesses around. That's why I still like these businesses. They are so hugely powerful. And it makes America as well very, very strong. As much as you might despise or dislike Trump, this is America. And they just carry on, because in a few years' time, he's not going to be there. So I still like AI, yeah.
People don't get that the guerrilla game in tech is that the bigger you get, the bigger you become. But it is another example of Nvidia. If it was a country, it would be 12 South Africas. It's a bit scary, isn't it? So it is the 12 times South Africa's GDP if it was a country. It's quite scary.
That is scary. It gives you an idea. And I watch them daily. And the beauty, Alec, the beauty about markets today, and that's what I say to a lot of my clients, I say, if we don't like it tomorrow, we get out. I don't have to make a decision today or now. If I buy for you in the morning, I can get out in the afternoon. That's the beauty of liquidity in markets. And that's why it's a big rule. Always stay in liquid stocks that I can get out of. And so I don't have to make a decision today whether, I don't feel it's a bubble today. Tomorrow, if I feel it's a bubble, we're out.
There we go. There we go. I was going to let you go, but I can't without asking you about crypto.
And I'm sorry, you know what I mean? I don't like people to lose money. I genuinely don't. And whether it's gold, whatever it is, I don't get delight in other people's misery in that. And I see it's coming under pressure now. And I think one of the issues that worry me about the market is that there were too much promotion. People were promoting it. And when you promote it at that kind of price, you can't buy the full coin, so you gear up. And that's the worst thing, because as it reverses, as we see, it means you've got to unravel that. It's like buying a house and, you've got a mortgage and suddenly the value of the house falls, you're underwater. And I think to a large extent, some of the weaknesses that we saw in Nvidia and some of the tech came as a result of that. So I don't wish harm on anybody, because I think somewhere down the line, we're going to be using tokens or crypto, or there's going to be some new way of moving money. But I don't understand it. I always explain, I like a balance sheet, because I like to go to NIP, even in Prosus and analysis, because I fight with people about that all the time. But because I go to the balance sheet and I go to the income statement and I read and I say, nah, and that gives me a view. And that's what I like to do. But I can't do that for crypto and I can't do that for gold.
So you've opened a door with Prosus and Naspers. You don't like?
No, I like it. I like it.
Oh, you like it?
Because of Tencent, but not because of the delivery box. Chaps running around delivering pizzas at 3:00 in the morning. And I like to create arguments because when I look at their income statement, it comes from the sale of Tencent shares and from the from earnings, from putting their earnings in 20% of Tencent's earnings. So that's nice. The rest is loss. So if you take what they're doing on all the other businesses and you take a cost, take out those two statements, and that's why you've got to go look at the income statement itself. And I like to fight, and I get a lot of people throw apples at me, rotten apples and eggs and everything. But I buy it because of Tencent, but not because of everything else. I think that's people are paying themselves lots of money for those businesses, and they're not. I just don't get excited about it. I would have preferred
You don't give Fabrizio Bloisi the thumbs up. You don't. You're still a little judgment out on him.
No, he's a good manager, but I just don't think that it's going to take generations for those businesses to play catch up with with their holding in Tencent, which is still the big gorilla in that room. Everything else is, they're still in losses. I mean, big losses. If you take what they're earning on all those other businesses, even though they're improving, and you take the costs of running all of those, still a big negative. So listen, I think Adrian Gore's got the same problem with all the other things. Eventually, you pay every day. You're paying to keep these businesses going. Somewhere down the line, you've got to recover all of those things. So this is accounting 101. So that's why I like to look at a balance sheet. I like to look at the income statement, not what the PR people say. I like to go down to break it up line by line. So Fabrizio is a good man. He's been, he's running nice businesses, but they're not going to move the needle on Prosus and Naspers.
David Shapiro is a chartered accountant, I'll remind you, so he knows all about the numbers. He's not going to be fooled by any fancy PR talk. He's also South Africa's favorite stockbroker. And I'm Alec Hogg from biznews.com.